Forex traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma. Happy Good Friday and happy Easter. All right, this last week was a good trading week. It wasn't a great trading week. It was a good trading week, and it was the first week of the month, which we know we get some really big news events for. Equities originally had a pullback, and then they actually had a little bounce back up on Thursday and closed mostly around the flat range. We've seen the dollar and bond yields. They went down substantially, and they haven't gone down anymore. They've just kind of been sitting here at these lows, which really gives some underpinnings to the equity markets to stay bullish. We got nice moves from all the cryptos. They stayed really, really strong despite the pullback in the markets, which is a sign to me that they are wanting to go higher. Let's take a look at the schedule of last week. We can see the first thing we got was US ISM. Now, this ISM number was much worse than expected, 46.3. And for the longest time, we've been saying good news is bad news and bad news is good news because it's telling the Fed to back off. Here's the problem. The Fed is now backing off. And now the bad news is actually starting to become bad news. So when we got the manufacturing PMI, the markets actually sold off on that news because it is a weakening economy. On Tuesday, we heard from the RBA. They kept rates where they were, and the Australian dollar actually dropped about 1% off of that news. Next, we got the U.S. JOLTS job openings. These were much weaker than expected, and the market didn't like it as well. The market sold off on Tuesday. Tuesday night, we heard from the RBNZ. They actually raised rates all the way up to 5.25, much more than expected. However, the Kiwi really didn't jump on this news. Even though it was a surprise, it didn't jump on the news because everyone is now saying, oh, they're definitely done now. So the Kiwi, we'll take a look at it, didn't perform as well as it actually should. On Wednesday, we got the ISM Services PMI out of the U.S., much weaker than expected. Markets sold off again. At this point, Ankit and I have been asking the question, is bad news now bad news? What do you think, Ankit?
I mean, for the most part, last week was the first week where we did notice that bad news was bad news for the market. So, are we in a transition? I think we are. Maybe next couple of months we'll probably solidify that opinion. But yeah, I mean, despite all of that, again, we are seeing a lot of expectation kind of moving around the further rate hikes. And I think at that point, we'll have to see what the equity market does. But so far, as we finish up the week, even despite all the bad news, the market still did okay. They were mostly flat. The initial reactions has been on the negative side, but then they end up recovering. But yeah, it's still unclear to me if that is the case, and something we have to wait till next week to form that opinion.
Well, thanks, Ankit. And one thing I think we can say is that the market has gotten to a point where it's really expecting central banks to back off. Would you agree with that, Ankit?
Yeah, I mean, absolutely. This is where, if you really look at the major central banks, the RBNZ was a bit of a surprise last week, but RBA held rates, Bank of Canada held rates. The meeting next week, we have Bank of Canada raise stable next week, and they're expected to hold rates again. So it seems like that is where it's heading into, and more signals that we get. That's really where we are seeing the expectation kind of shift, that we have been in this rate hike cycle across the central banks, not just the U.S., but that seems to be either slowing down or pulling it back a little bit. So I think that's the real new story here in 2023.
Totally agree. And let's finish off the schedule. We had a Canadian employment report, much better than expected. I don't think that's really going to change what the Bank of Canada is doing. And then on Friday morning, we had the U.S. payrolls report, and it basically came in line, slightly a little stronger. The dollar had a muted move higher, but again, I don't think this number changes anything we've seen. So let's take a look at the actual price action that happened last week, and we can see, as Ankit said, the markets were flat. S&P, by the end of the week, we were flat. Crypto down a little bit. Gold jumped. And we got a surprise cut in supply from OPEC Plus, which caused oil to jump substantially. So if we take a look at where the S&P is on a chart, we can see that it's having a nice little bull pullback. and it's pulled back, and we had a nice little bullish engulfing candle here. Everything in this chart is pointing to higher prices in equities. My call was that we're likely to make a run all the way up to this 41.80, where there's going to be the next bit of resistance. So we've got 2%. We got 2% here, and I think we do see this 2% over the next week or two. I am moderately bullish here on equities going higher in the face of some bad news, which tells me the market does want to go higher. We take a look at which currencies did the best last week. The Swiss franc, again, the best performer. This is the second week in a row, but the European currencies have been our favorites. Pound up 0.5%, euro up. So the European currencies continue to be the place to be. What continues to not be the place to be are the Aussie and the Kiwi. They were the worst performers for the week. And remember, this is a week that the RBNZ surprised the market with a much bigger than expected rate hike, and the Kiwi went down. That tells us that the Kiwi does not want to go up. It wants to go down. You can see dollar and yen pretty much flat on the week. We go over here to the cryptos. Ethereum has been our favorite of the cryptos, and it had a great week, up 3%. Everything else fairly muted, fairly flat. So let's take a look at where the market is here going into this week and get us ready for this week. We already took a look at the S&P. Let's take a look at the world index. This is the VT, the world market index. You can see we've got some resistance here. We didn't really break out, but this is looking like it wants to bounce as well. There is some overhead resistance that we're going to need to get through. But I think, again, like the S&P, I think we've got about 2% of an upside move potentially in the equity markets here over the next week or two. If we take a look at where cryptos are, this is our crypto basket. We can see just a ton of resistance up here. We are hitting up against resistance, and we're going to see that within all of the cryptos we look at individually. They're up against major resistance. Ethereum is the only one that's been able to punch through, but it looks like the rest are about to catch up to Ethereum. On the schedule next week, we do have lots of holidays here on Monday. So do not expect there to be a lot of heavy trading activity on Monday. Understand that a lot of banks are closed. A lot of countries celebrate a holiday on Monday. I don't think the real trading is going to start until Tuesday. After that, we've got a lot on the schedule. We have US CPI on Wednesday. That's going to be a very, very big report. If this number comes out weaker than expected or as expected, it's going to tell the markets that the Fed is backing off because the expectations are that inflation is coming down. At 10 o'clock, we get the Bank of Canada. You can see they're supposed to just keep rates where they are. And then we've got Aussie employment report on Wednesday. So Wednesday is jam-packed with lots and lots of information. Thursday, we've got the PPI out of the U.S. And then on Friday, we've got retail sales out of the U.S. This week is looking like a much better second half of the week story than a first half of the week story. So looking at this week, we've got equity markets are likely to remain bullish. We think we've got about another 2% on the upside. We do hear from the Bank of Canada on Wednesday, so be ready for that if you're trading CAD. And then economic reports that Wednesday looks jam-packed with the US CPI, FOMC minutes, and the Aussie employment report. All right, so let's get into each currency individually. Let's take a look at them and score them, and then that'll let us know what we're looking to play this week. Let's first off take a look at the cryptos. Let's check in on Bitcoin, and you can see Bitcoin has just been in a big, long high base. At some point, this is going to break out. The thing with high bases, you just don't know. You don't know when they're going to break out. We've been talking about this in some of our videos that you want to be taking small positions on the breakout. What I mean by small positions is pyramiding. So if you wanted to buy, one full coin, take a fifth of a coin. Take a 1/5 position size on a breakout. And if it fails, then you have the time to sit and wait for it. If it breaks out again, then you can grab another little bit, and at some point it will break out. We did this on Ethereum, and it actually worked out very, very well. So same thing here with Bitcoin. It is in a high base. It's looking strong, but it's not ready to move quite yet. Come over here to Bitcoin Cash, and we'll just do a quick, we're not interested. We are not even close to breaking out on this one, so we're going to just jump over here. Here we are to Ethereum, and we talked about You know, when you have these high bases, they will break out at some point. They will break out, and you get these little long upper shadows that can sometimes trigger you. This is why we like to just get into a little bit, and then we can follow it up. You can see Ethereum had a pullback here at the end part of the day, but we like it quite a bit here. We still like Ethereum to the long side more than any of the other cryptos. This is Litecoin. You can see we're not trading up at highs. We're not looking at breakouts. We're just going to forget this one exists for the moment, and we'll check back in on it when it actually does something. Let's jump into Forex. Now, dollar, I've been bearish dollar. I think dollar is going lower. That's been my position, and the price action has absolutely supported that. And my play has been anytime the dollar rallies to short it. Well, guess what? We got a little rally here. I think it's time to short it, but we'll take a look at this on a short-term chart. What do you think, dollar? What do you think about the dollar, Ankit?
Well, dollar definitely has been in this interesting place here. You're absolutely correct that since starting March, we have been trending lower. But I must say that the last few days has not been the most easiest in the dollar because, again, if you're comparing against the Aussie or Kiwi, I mean, those pairs have been going down. But then on the other side, we have pound dollar making new highs and the euro dollar is going higher. So there's definitely this mixed picture here. So I don't really love the dollar. I do like the fact that, every time it rallies, maybe it's a good opportunity to sell. But it's just very muddy here. I think we're getting a much clearer price action outside of the dollar. But yeah, this is where we are now in this little shorter term in the upward side here. Next week, again, on the FOMC or the meeting minutes we get the CPI. I think after that, what we're looking for is a bit of a breakout in the US dollar. So mildly bearish. I just want to use the word mild. It's a lot of the movements that we're looking at right now. They're either sitting at a mild bullish or mild bearish. So don't want to have a very high expectation that this is going to fall apart. At the same time, we are not really seeing a big rally. So it's just kind of stuck in this little smaller range here.
I totally agree with your call of mildly bearish. I am not expecting dollar to fall apart either. I think it just drifts a little bit lower and lower and lower and lower over the next couple months. So I don't think it's a great trade either. Here we are in the yen. The yen's right in the middle of a range. It's right in the middle of a range, and I'm liking yen, but yen you can just be both sides on. When it's strong, I think you can buy it. When it's weak, I think you can sell it. I ultimately am bullish on equities, which tells me to be bearish on yen. The problem is the technicals don't really tell me to be bearish on yen. What do you think about yen here, Ankit?
No, my stance is pretty much the same as I had last week. I think yen can be played both sides, and yen is getting is driven by a lot of the risk sentiment that every time we see markets sell off, we see the yen kicks up, and vice versa. So this is an environment where we don't want to be sticking our neck out and say, yeah, I think this is going to run for the next 3 weeks. We don't have that. So we have a couple of days of rallies and a couple of days where it fell. It's a lot of back and forth. So I want everyone to kind of keep that in mind is that, if you're looking for a strong trend, then this is not the right place to be. If you're looking for volatility, then maybe this is a better place to be. So I think this is what I expect in the next coming weeks. The yen just to kind of go back and forth as we are digesting a lot of the news in the markets. Even though it's a bullish news or a bearish news, I think the yen just reacting accordingly. So a lot more volatility in the yen compared to the dollar.
So what Ankit is basically saying is, for a swing trade where you're going to hold something for a couple of days, the yen is not the right trade. For a day trade where you're in for a couple of hours, the yen is the right trade. You are going to see some volatility on both sides. Moving on to Swiss franc, we've got a nice trend here. It's not a strong trend. It's a good trend, but I do like Swiss franc long. I like all of the European currencies. So I think you can take a look at Swiss franc on the long side. I think you can take a look at euro on the long side. And frankly, euro to me looks better. Now, the Swiss franc has been better over the past 2 weeks, as the euro has basically been high basing and gathering some steam. I still really like the euro on the long side, but I think you need to wait for some momentum to the upside. So euro looks great, Swiss franc looks great, pound looks great. Here we are with the pound high basing here, Had that run on Tuesday. We had this sideways move. It's all it's doing is going sideways, breaking out, sideways, breaking out. I like pound on the upside as well. So it's very clear what is going higher. And it's also very clear what's going lower. We took a look at dollar and yen and said, oh, it's hard to tell. CAD, I'm going to put CAD in that basket as well. So the CAD, it's right in between moving averages on a daily chart. It's not going anywhere. So we're going to throw CAD in with the dollar and the yen as, okay, not really trending. But this is where it gets super clear. Aussie is breaking down. We just had this nice long low base. We've broken down, had a little bit of a bounce on Friday. We are still of the opinion that any rallies in Aussie, you want to be short. So Aussie is a clear short to me. And the Kiwi, I'm telling you, the fact that the Kiwi could not hold this breakout. This was the move on the RBNZ surprise. Big surprise, and then selling. That's telling you this wants to go lower. So for me, I actually like the Kiwi best as a short. The Aussie is pretty clear, but I think the Kiwi is showing you, even on the craziest best surprise to the upside, it couldn't hold gains. I think the Kiwi is number one on my list for a short. So it's basically European currencies against Aussie and Kiwi. That is the clearest trade at the moment. So here we are. This is where we stack up. We've got Ethereum that looks good, and we've got the Euro currencies that look good. In the middle, we got a whole bunch of stuff going sideways. We got Aussie is clearly going lower. I'm watching Kiwi for that breakdown. On the shorter velocity end, we've got the Kiwi showing a little bit more downward velocity than Aussie. So this, again, is why I'm liking the Kiwi a little bit better. And again, the European currencies are my favorites. So let's go ahead and pair up some of those pairs, and let's talk about possible entry points and possible trades. I'm going to start out with my favorite here of Euro Kiwi. This is a Euro Kiwi. Let's start with the daily chart. And we can see that we're seeing a nice high base breakout here on this daily chart. So we've had about 3 weeks of sideways consolidation, had a little bit of a dip here, and the buyers came right back in. If we take a look at our smaller time frames, it's got everything I want to see. We just got a break. We pulled back orderly. We had a nice turn. Look, I really like Euro Kiwi here, and frankly, I like it here on this bull pullback here on a 4-hour chart. Yes, you can go down to some smaller time frames, maybe get a little bit better entry points, but I think Euro Kiwi is probably my top trade here for the start of the week. Anka, what do you want to take a look at?
Absolutely. I'm in the same boat here. I mean, if you take a look at Euro Kiwi, Euro Aussie, they look very similar. And same thing, we can do these pairings against the Swiss franc as well. And we're getting the exact same thing. We're sitting at these highs and the lows in these pairs, which means they are a good potential for a breakout trade. So, I mean, this is where we are not really getting a lot of twists and turns. I mean, these are gradually moving in that direction. So I think as long as you get the direction right here, this is the place to be. Not seeing any crazy reversals where we need to totally shift our outlook. So until that happens, we just continue trading that direction, and then until we get a big turnaround, and that's where we need to change our outlook. But it seems like as much as you want to look at something else, focus on what's working. And right now it's the euro, the pound, and the Swiss franc. I mean, they continue to be on this a stronger trend list here. So we just continue focusing on that and pair that against the Aussie and Kiwi. I think those are better plays compared to looking at yen crosses or the dollar crosses, which are a little bit more volatile or going back and forth. So I just wanted to kind of point that out, that if you're looking for low volatility plays, then these are better places to be. You're looking for more volatility plays, then you might want to look at some of the yen crosses or the dollar crosses.
Ankit, I could not agree more. Basically, Ankit's saying, go with the easy trade. Right now, the easy trade is right there in front of you. Now, look, it may change. It may change over the weekend. It might change on Sunday night or Monday morning, and we will adjust to that as traders. But right here, right now, don't make the hard trade. The dollar's a hard trade right now. The CAD's a hard trade. The yen, unless you're day trading it, I think it's a hard trade. Go with the easy trades, the euro currencies against the Aussie and Kiwi. That's where the market is right here, right now. So let's go look at those. Once that changes, we'll look somewhere else. But until that's where you want to be. We've got bullish outlook in markets. We've got the US CPI coming up on Wednesday. That's going to be a big one. And we just talked about focus on the currencies in play right now. Well, that wraps it up for the Currency Room. Thank you for joining us. Everyone have a great holiday weekend. Again, happy good Easter, happy Passover, happy Easter. Look, I don't know what holidays I'm forgetting, but if you celebrate a holiday this weekend, have a great one. That's all we're saying. Goodbye, everyone. Have a great weekend.